JB here. Hope everyone's doing outstanding. Monday, December 22nd, 9/19 on this fine morning. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the green. The SPY just broke over 684. And yeah, happy holidays. Tomorrow is the unofficial or official or however you want to spin it, kickoff of the Santa Claus rally season. Typically, it's the 5 last trading sessions of the year and the first 2 of the new year. We got a half day thrown in there, so 4.5 days, I guess you would say. Uh, but if you take a look at it historically speaking, there's last year the S&P was down 1.7% over that time frame. The year before that, it was down like 0.1%. But there over I guess recorded history. I don't know how far go. Don't know why I don't have the chart up here. But the Santa Claus rally has never had 3 straight years of declines that time frame. So we'll see if this is the first one. Hopefully not the case. But if you take a look at the market, I mean, this time last week last week was Owl Capital and Oracle, right? The $10 billion data center that was getting nixed because of the debt situation with Oracle, or the supposed debt, right? Then it was a Broadcom earnings, Oracle earnings the week before. So that AI angst is still with us. But then last week, at the end of the week, we had the CPI data. Finally, people, very easy to create fear, uncertainty, and doubt when the data for the overall economy is, you have the blinders on. We don't know if inflation's picking up. We don't know if unemployment's picking up. We don't know any of that stuff because the data wasn't coming out. We finally started getting some data, and even with the data coming out, it's still very far in the past, very backward looking. But CPI data kind of eased some of those concerns that, hey, maybe cutting rates while inflation's still high is not a good thing. And turns out that hasn't been the case so far. We'll see. You still have the bears spinning the data, saying, oh, it's not complete data. There's issues in regards to the shelter side of the inflation. So we'll see how that all plays out. But then tomorrow we get the first read on third quarter GDP. The thing is, that data was supposed to come out in October, and here it is December. So we're talking a two month lag on a data that's already a lag, right? Where GDP data is already 3 months of data from the previous quarter. So we'll see how that all plays out. 3.2% is the GDP growth rate that is expected. You have to think 2.5 to 3.9, somewhere in there. I don't think that'll do much for markets, right? A huge surprise. We had that huge surprise on was it the first quarter? I think it was when we had the tariff related issues with GDP, where the numbers were skewed because of the import number being drastically reduced. We'll see how all this plays out. But to me, it's probably like a non-event tomorrow with that. And then to me, outside of that, it's just the Santa Claus rally. So also, as we start to get towards the end of the year, you get all these predictions from these analysts, right? They'll come out with their 2026 outlook, and then there tends to be less analyst upgrade downgrade. So it kind of gets to be a little bit quiet in regards to that. And then trading volumes kind of, I wouldn't say they dissipate, but it tends to be kind of like choppy, quiet. And hopefully there'll be some opportunities to play some names. I still think the path for least resistance now, especially we got through last week, probably to the upside here and maybe some all-time highs. But at the same token, I remain open to both sides. I did those Broadcom puts last week. I'll continue to look for opportunities on both sides if I see them, right? But to me, I'm probably more apt to wait to play a bounce than to try and play puts for downside. So that's kind of the overall market. 679, the big spot on the way down, and then 686 probably if we get some buyers here today. We're at 684 now, so maybe that's tomorrow, Wednesday. All right, that's quick on overall market. So now just individual names. SanDisk, I was looking for some names for bounces on Friday. I was looking at Oracle, kicking myself here. It's up $6 here in the pre-market. SanDisk, the Broadcoms. But SanDisk was like 220 at the open, and then it started to break. And, Micron reported their earnings last week, and pretty much the big story in Micron earnings was that they can't meet demand, right? There's not enough supply of memory and storage. And, SanDisk it's not an apples to apples comparison when you look at Micron and SanDisk. And Micron's actually getting rid of its legacy storage business. So, but anyway, to me, it gives you, if there's any little read through you can get, to me, it bodes well for SanDisk. And I put the multiples last week. If you look at its revenue, top line revenue compared to its market cap, I think it trades 4 times its top line, where some of the other names in the space are 6, 7, 8 times. So to me, maybe there's an opportunity to continue to play for upside, even though the name is up like 570% since February. Anyway, I've been playing it. I said a couple of weeks ago, like playing SanDisk like a fiddle. I think I have one losing trade over the last month or two. Knock on wood. At some point I say that, and that'll be the last time I make a winning trade on SanDisk. But anyway, I was looking for bounce plays, got those SanDisk calls. I was looking for weekly strikes, some lottos, And I'm like, let me just get a little more, get some time, get strikes into this week. Got those 275s. And then within a matter of 10 minutes, I was able to close them out to cover costs. Um, and then got some more out for over 100% to cover the rest of the costs and some profits. And now I'm riding free into this week. It's up $12 here in the pre-market. It might be 250. I don't know what those 275s are going to be at the open. Maybe 250, $3. I might take the last, not the last few, but take a couple more off and just leave the last few. And then if it stays over 250, I might look for some FOMO calls. The only issue is strikes into next week, the 300s are expensive on a risk reward basis. So I don't know if I'll get strikes into next week. We'll see how that plays out. But hopefully, I mean, it looks good. I mean, I'll lock some more in at the open and then look for other opportunities there. Trip at the end of the day yesterday, Friday, I got some trip calls. I mean, I've played this one. If you follow the this room or community for a long time, it's one of my favorite names over the years. Now you look at, just on a valuation standpoint, it's three segments of its business more than exceed its market cap, in my opinion, right? I mean, obviously the market's saying it isn't the case, but to me, that I think there's a dislocation or a discrepancy, right? You also have Starboard came in with an activist stake back in February of this year. It's chopped between 12. It might have went all the way down under $12, all the way up to near $20. I think it trades back up near $18 in the coming weeks. I'll continue to look for other trades to take advantage of that move. Added some calls on Friday. Also, you have to think they had buyout offers in 2024 in the fall of last year. So you have to think some there's more than just Starboard looking at this name as undervalued. And now you throw in the wild card, has a 23% short interest. So that's Trip. I'll continue to look for opportunities there. Serve is up here at 1060. Lackluster session on Friday. I'm being patient here, but I'll definitely be adding more strikes into 2026. And then ORCL, right? I don't know if I put the spread last week. I was looking at 210s into this week, 205s. It's one of those names, like maybe trades down to 150 or 120 in the coming months. But I think there's short-term opportunity to play for some of these bounces because it's like, to me, this whole story in regards to its debt and all these other black swan events that are kind of going out there in regards to AI, and ORCL's kind of like the poster child for it. So it creates a lot of catalyst for it to get oversold, at least in my humble opinion. So don't be surprised if I try some lottos. I don't know if I'll do it here at the open with it gapping so much, but ORCL and Broadcom, those are two names I might look for some lottos. And then, CGC, IIPR disappointing last week. You had that all the hoopla and the hopium on the executive order to reclassify marijuana. Then it came out and the details were kind of like, I wouldn't say murky. They just were more general. I think people were looking for specifics in regards to the timeline. So now we're kind of waiting on the Attorney General to either bypass all the loopholes to get it done, or I don't know if they're going to schedule another meeting. I don't know what that all. I think that's some of the issues. Some of these names sold off is like the clarity in regards to the timing of some of the stuff, and also you had people waiting for updates in regards to the banking sector, because if you lift the veil or whatever on some of these names that have been restricted, because if you're in the sector of marijuana, you can't write off some expenses for taxes and all these other things because it's a drug, right? I mean, marijuana, it's just things you can't do, but it gets reclassified. Then there's financial ramifications for some of these companies. And that's why I like IIPR, particularly some of these other names. I mean, just that alone will probably help their earnings. So anyway, let's have a great day. I'll be back on audio later. 2 minutes to open. Rock and roll.